All right, let's talk some more about the session underway. Alan Knuckman's with us, Chief Market Strategist at BullseyeOption.com. Alan, what needs to happen this week for stocks to get back on track?
Nothing. I mean,
yeah, we're on track. Nothing. Yeah, I knew you were going to say that.
Right, we've got gaps up above, and last week's action was very, very positive.
Wait, what are you talking about? S&P was down.
It was down, not even 1%. Do you know the VIX?
It isn't positive when something goes up, though, Alan? I thought negative was down, positive was up.
Wow, you're fired up today. All right, I'll bring my game. All right, so listen. The VIX was actually down. So as we've seen every time, it's been a whack-a-mole project. Every time the VIX pops up, it gets beaten right back down, and that happened once again. So that's very healthy. You want to see the markets get tested because it's not how they act, it's how they react. It's most important to keep this bull run in play. Now, you saw the S&P, ended up being modestly down on the week. But that's a pretty healthy comeback after the biggest unwind that we've seen in many years. That was the first 2% unwind that we've seen in, I think, 2 years or something like that. And the markets have bounced back. So I'm still pretty positive. There's a lot of positives up above. If we can fill those gaps, then we're gonna make another run. We got big earnings coming out this week. We've got earnings numbers that are fantastic. We've got rate cuts that are coming. Nothing's ever 100%, but if you look at the numbers for September,
they basically
it says 100%.
Right. Well, that kind of makes me wonder if we should be braced for a little volatility on there. If nothing's ever 100%, but it's at 100.
It's 100, and then it's more. It's 99% for December.
That's probably even more extreme.
Okay, but the thing is, you and Ben, they have given this on a silver platter to you guys. Every time, every time they play this perfectly. GDP was positive. How many times do you get a soft landing like this? Never, never, ever, ever. So let's appreciate where we are and how we've gotten here. You may not like the politics behind it, but that's not the business we're in. We're in the business of performance, and I love the performance of the market.
Okay, all right, fair enough. There he is. Alan's awake. Hey, how long have you traded Cleveland Cliffs? You love going for this stock. It's like a third time we've traded this over the years.
And the third time we're going to try and make money.
Okay.
So, I don't know if you remember, but there was a movie once called Wall Street.
Yes.
Okay. Kind of for a lot of people my age, right?
Yeah.
So the Bud Fox play was that his dad worked for the airline, right? And so, which is not legal to have inside information, but anyways, that's how he built his career. So Cleveland Cliffs is my hometown. I grew up in a mining town. Now,
you're scaring me with this intro.
My grandfather worked for the railroad that delivered the ore that was mined on the mine. So I get the cycles when it comes to iron ore. All right. This is my life. I know it. And so how many times have we bought at the low and then we sell when it rallies? Now we've got a great triple bottom on this chart. This stock is down 10% in the last 52 weeks versus the XME, the ETF that tracks metal and mining, up 20%. So it's risk reward, and it also meets my indicators in the fact that you're seeing leverage buying at these levels, which is a sign of smart money. So it's got so many positive things going for it. And this is not my grandfather's company anymore. This is the largest steel company, I think, in the world now, with all the acquisitions that they've had in the last 5 years.
To your point, every time it gets down to like $12, it bounces over and over for the last 2.5 years. Like this thing just doesn't break through like $13, really.
And what's wrong with that? I mean, if you can see that, that's probably, and we've said this before, you don't want to buy low, and then sell when it rallies. Like we unwound gold here a couple weeks ago when we had GOLD, which was the Barrick gold that we positioned here a long time ago. And it's just a matter of being patient. It's about risk rewards, by using options for their positives, limited risk, being able to sleep well at night, and a modest move in this stock makes big money.
All right. Blue Horseshoe loves Cleveland Cliffs. Bullseye Options loves Cleveland Cliffs. And I knew there was a personal connection in there. Okay, I knew it.
I was just up there, and I watched the ore boats go by my house, and so it makes me look at the chart. And actually, sometimes I need something to
trade what you know.
So there you go, trade what you know, Peter Lynch. And so when you guys were talking about PayPal and you were saying how bad it is, as soon as I get off this call, I'm going to look at this chart because they may be bad enough to buy too if you use the proper indicators. All right, so let's get back to Cleveland Cliffs, not your trading style. But So the January options, we're looking at January 13 call, the low, that's the low, multi-year low. And so, 13 call is $2.50 in the money, or it was this morning, and it's trading for about 350. So the expiration break even is about $1 up above. So you've got 6 months of time for development. There's a gap at 20, and 1750 is the halfway point. We've been in a range for 2 years between 22.5 and 12.5. So again, you buy at the low end of the range, you sell when it rallies. It's, we're not making it hard. I make it really ridiculously boring, but hopefully sometimes my excitement personally makes it more fun than just sitting here watching it slowly.
Always, Mr. Alan Knuckman, we appreciate that. I knew there was going to be a personal connection, Cleveland Cliffs. Just too many times it came up. All right, thank you very much, Mr. Alan Knuckman.
Thank you.
All right, good stuff. Chief Market Strategist at bullseyeoption.com.